to ask questions in the chat box as we go. I will keep it open on the side and then just periodically. So one of the things that I was curious about doing was doing a market scan without any of the indicators. So the reason I wanted to do that is because when I do it without the indicators, it helps you to see. And obviously in the long run, if you want to become a better trader or master trader, you need to be able to read price action. So what I thought I would do is run through the charts with just the candles for a bit to talk a little bit about the market conditions, and then run through it with the indicators on so that we can look for potential money-making opportunities. So if there's any objections to that, you need to speak up now or forever hold your peace. Okay, so the next thing is, I'm just grabbing the annotation tool. So the next thing that we want to do is market conditions that are safer for us to trade, that have a higher probability. So this is possibly one of the most important things that I learned in the first 2 or 3 years of trading. When you learn it is really who you're with and who's teaching you. You could learn it in the first 6 months or the first day, but so this is one of those things. So first of all, I want you guys to always look at the last sort of 6 to 10 candles. And really what I want you to do is to stay away, potentially stay away from charts that have a series of largely going sideways. The reason for that is there is no real clear market momentum, and we're usually waiting for some form of, so that's just a loose kind of guide over there. If we see the market is moving in what often what is referred to as marching soldiers, then that means that often there is a good trend already in place, and therefore the market has momentum. Okay, so the next thing that we want to do is we're looking for conditions where there is a form of trend. So we're not just talking about the 10 candles, we're talking about the general market conditions. And so if you go through the past year, you can see that there was a in the background here, then it moved into an uptrend. We had high lows, high highs. We've broken that. We're now currently producing lower highs and lower lows. Identified that we are in a bit of a trend to the downside. The next thing that we want to do is qualify the quality, and this is a very important part of the scanning process, is we want to qualify the quality of the trend. So in other words, is it a very nice smooth trend I'm going to show you now, or is it a very choppy trend? So the reason we want to determine the difference between the two is, generally speaking, if it is a very choppy trend, we potentially want to consider having a wider stop loss. We might want to do that because of that increased volatility. Whereas if the trend is nice and smooth, usually we can have a tighter stop loss, which changes our potential reward on a trade. Hi everyone, are you all there? So does this make sense to you guys? So, excuse me, I also just want to blow my nose. Give me one second. Just wanted to blow my nose, and you really didn't need to witness any of that, so just wanted to spare you. Now, so what we're going to do now is let's run through a few charts. So that we'll start with the currency. So the next thing that I want you to be aware of is that the US dollar. Yes, if you have any questions, please just type them into the questions into the chat box, please. The US dollar and the US economy is the biggest in the world. So the US economy is so big that if you take China out for now, and that China's economy has shrunk to 60% of the scale of the US's. And if you remove China, the US economy is bigger than the next 8 biggest countries' GDP combined. So it's absolutely massive. It is just so big, I don't think most people appreciate that, 95% of all the transactions on the planet are done in US dollars, because you add commodities, you've got crude oil, gold, all the different commodities are done in US dollars off. So even just within the currency markets, when we're looking at euro versus the US dollar, it isn't, that's just the currency market. When you go to the commodities market, the US dollar is also in the commodities market. So one of the things that we want to do is to just be aware of how the US dollar, what it's doing. Just, is it trending or is it not trending? And there's a couple of different ones we could do. Believe it or not, one of the charts that is very highly correlated with the dollar index. So if you have the dollar index, that's great. But if you don't have it, one of those that is highly correlated with the US dollar is dollar Sing. It used to be dollar Swissy, but it tends to be dollar Sing is actually very, very highly correlated. So that's quite good. So when we look at this now, we can see, just to get a broad sense, we can see that we did have a nice little uptrend here. We can then see that the market broke into a downtrend, broke that level of support, came back, tested it as resistance, still found resistance here, and was in a downtrend. It's now started to come back up to test this level of resistance again. And if it breaks it, we will have a nice uptrend. We'll be moving to the upside and we'll probably go all the way back up there. So if that's the case, we're largely going to see not only dollar Sing move high, but we'll probably see a bit of a stronger dollar. Okay, just checking. Nobody's asked me any questions. I'm looking at the webinar chat, so we're good. All right, so that is one of the things that we can determine from this. We can also see that the last 1 or 2 weeks that the dollar hasn't necessarily done anything. So that's a broad kind of approach. The next place we want to have a look at that is to have a look at euro dollar, because then we often get a good signal. So here you can see recently we've had the euro weakening. You can see it's been very choppy the last 10 or 12 candles, the last 2 weeks, incredibly choppy. And then we had a move prior to that. And then we had just sideways motion. So this kind of motion is not really constructive for us. So the market was trending higher, then it kind of went sideways for more than a week. Then it broke down a bit, then it went sideways a bit. Now it's dripping down. So generally speaking, what we want to do now is compare it to the pound. So if we look at sterling, you can see sterling hasn't gone anywhere in about 3-4 weeks, almost more than a month. So going back to beginning of December, it really hasn't gone very far. And so the point, what I'm showing you here, is that the dollar itself hasn't really kind of been doing so much per se, and especially recently. And so what that does is that usually will tell us if the majors are doing anything. So let's do a quick recap. Let's run through all the different charts. Let's have a look at what's going on with euro dollar. Euro dollar is trending lower, but it's not a great quality trend. Then we've got sterling. Sterling is not going anywhere at all. It's going largely sideways. So sterling is very unattractive. Once it breaks out of here, which could be to the upside or the downside, then we're likely to get a bit of a trend. And actually that is probably more supported by the dollar than anything else. Then we have a look at Aussie dollar. Aussie dollar is breaking lower as well. So this is similar to euro dollar, except this has broken a little lower. So that tells me that, that's probably a weaker Aussie. Let's look at Kiwi dollar. Kiwi dollar has also broken a little bit, is testing this level, starting to break a little bit lower. So we've got a weaker Aussie and a weaker Kiwi if you compare them to the euro dollar. Sort of sliding a little bit there. So very similar type of behaviors there against the US dollar. So it isn't always, just in case I give you the wrong impression here, it isn't that everything is always moving against the dollar. It's just that there are periods that when the dollar is incredibly bullish or bearish, or is very strong or very weak, that then we can get some really good trends in the majors. If it's not going anywhere, but we find, for example, euro dollar is moving, GBP isn't moving, then we know that it's the euro that's moving. So one of the ways in which we can scan the markets is to look at everything against the dollar, so we can work out what's the dollar's looking like. Then we can look at everything against the euro. So let's just say that we do that now. We go look at all the euro pairs. We go look at euro Aussie. Is it trending up? Well, not really. It's actually quite messy. If you look at it from a weekly perspective, it's trending down. It's got lower highs, lower lows, but it's not really going anywhere. So it's a bit kind of messy from that perspective. So it hasn't really gone anywhere from now. If we look at Euro CAD was going sideways. It's broken down. So that's a downtrend, a little bit odd. Euro Swissy is also very, very odd. You kind of had a lower high, lower low. We produced a lower high, but now it doesn't really know. It's in a downtrend, but stuck between this high and this low. Then we have Euro GBP, which is also trending lower. So it's a generalization, but it does appear as though the euro is, and now we have the euro strengthening. So we were kind of getting some weaker euros but definitely no obvious trends. I'll show you what a clear trend looks like in a moment, but it should be obvious to you that it is trending here. You can argue, you could say, this is trending upwards. You can sort of see that it's trending upwards, but it's not really a beautiful trend. It's not very obvious. Now, the reason I'm teaching you this is I also want you to understand that we also want to learn how to look at the markets and not just depend on the indicators. And the easiest way to do that is really to just look at candles, to just really get it and just train your brain, which takes practice, but not a lot. When we strip everything away from the charts, at first you might not really be able to see much, but it wouldn't take more than a couple of weeks before you start to really get a hang of what you're looking at. Maybe even less than that, maybe a week. So let's look at a few others here. What is Euro Kiwi doing? So Euro Kiwi is kind of like, they're really, really odd when we kind of zoom out. Here you kind of had you had a trend previously over here, then it kind of is generally going down, but it's very odd. It kind of like this and then sideways and then up, and now it's trying to go up. It's like it's stuck within a channel. It's not looking great. It's not looking that great. So that's something we want to be aware of. So Euro Sing as well, let's have a look at that. Euro Sing is largely stuck within a range. So when we have these types of conditions, we are less likely to have a successful trade. Not the reason why is because nobody's in control. There's either an equal number of buyers or sellers, or they're just no one's in it. No one's in that market because trends tend to attract a lot of people to follow the trends. So trends tend to gain momentum, they tend to have more volume, and when you go sideways, you tend to lose volume. The market tends to go into a little bit of a coma. The market then tends to go into a little bit of a coma once it goes sideways. Excuse me. And so it's just not a lot happening. And so when we get into trades there, they could go either way. They could change direction, and also they tend not to travel very far. They stay within that range. And so we want to, on average, we have two choices. We either don't take the trades at all, or we widen our stop loss and we take profits sooner. Again, widen our stop loss because the market could bob around a bit, and we take profits sooner because the market might not necessarily continue onwards. And also, one of the things we don't want to do, ladies and gentlemen, let me be clear here as traders. We don't try to predict what this market's going sideways. I'm not trying to predict if the market is going to go down or up at this time. In situations like this, all traders will wait to see which way it breaks out. So they haven't made a decision. They're waiting to see which side it breaks out. And that's another reason why we like finding trends, because trends already have a direction and we want to get a piece of that until it runs out. But the best way to make money in this market is to trade a trend until it runs out. And the indicators here are very good at detecting of not providing signals right at the end of a trend. They're very, very good at that. In fact, if you're new to trading, the wave rider stuff, for example, to me is possibly the best kind of indicator setup I've seen. It's incredibly good at detecting early trends. I've never seen anything that is actually that good at it. And I'm not just saying that. I was surprised. I didn't appreciate, because, I've traded so many different strategies and systems. And now I just trade price action. And then I saw the wave rider, so I've kind of got used to not using indicators. And I was looking and I was like, this is really, really, really good. So let's have a look at the GBP pairs. So what's going on with the GBP pairs? So here we're going sideways. We started to come up. We were testing resistance in this area. We're starting to break up through that. So it looks as though we're starting to get more and more bullish. We're in an uptrend, technically speaking. But overall, what I want to point out to you here is that you've had really good trends over here. We didn't really have a trend here, but we might, this is looking good. So we might actually have some good trends on those pairs. The Aussie and Kiwi pairs, the Aussie and Kiwi pairs were looking a little bit weaker. So if the pound's not going anywhere, then that could mean that we see it climbing against the Aussie and the Kiwi. So here, for example, pound Kiwi should also be climbing up a little bit there. What about the yen crosses? So what about those? So most of them are kind of pushing to the upside. They've had some really good trends over the last couple of years. They're sort of losing the trends at the moment, but they are still pushing in the same directions. They tend to, almost as though that yen continues to weaken. So if we look at euro yen in comparison, it's still generally slipping to the upside. It's not like we're seeing it head all the way down here. If we look at pound yen, we see that. If we look at Aussie yen and Kiwi yen, let's look at Kiwi yen. It's very choppy, but it's still operating near the highs. So it's still kind of doing that. But that being said, it's potentially still a very good pair to trade. The yen crosses right now across the board appear to be offering more trends than anything else. Let's have a look at CAD yen. Still pushing up near the all-time highs here. We've got Swissie yen has been offering some incredible trending opportunities. So you can see that there's a correlation here between all the yen pairs. So there's good and bad things about correlation. First of all, correlation is a good thing because it tells us that if we see all the euro pairs going down, or we see all the yen pairs going up, or the yen crosses going up, it tells us there's a definite trend there. It actually tells us in a way that there's safety in numbers. This chart or this currency pair is definitely moving. You're not imagining it. Then it gets a little bit tricky because now we have to decide, are we going to trade all the yen pairs or just a few of the yen pairs? That, I believe, is an individual trader's choice, depending on how they've been trained and how their thinking goes. My perspective on that is if I get 4 or 5 setups across 4 or 5 different yen pairs, I will trade them all. And I'll explain why I will trade them all, but I will reduce my risk. So instead of, instead of risking 1% per trade, for example, I will risk 0.25% per trade. So in other words, I divide up my risk, but I take all the trades out. So why do I do that? The reason is experience. Experience has taught me, some of the traders, best traders I know, would say to me, they will just select out of those 5 setups, they will select the ones they think are the best setups. But in my experience, doing it that way often meant that sometimes the one setup that I didn't really think was going to do anything moved like crazy. And the one that looked like it was going to be an easy trade setup actually kind of either failed or didn't really go anywhere. That happens often enough that I tend to just take all the trades. And usually I still come out net profitable. And then I don't have any regrets about the fact that I took or didn't take any trades. So that's the place at which I have arrived. But the important thing to take away from that is that we are increasing our risk. When we are taking multiple pairs of the same currency pair, we really should reduce our risk. So if we're taking, so the general rule of thumb is that if you're taking 3 yen trades, that you would divide your 1% or your risk amount by 3. Okay, I will usually not do that. I'll probably, on 5 pairs, I will take 0.5% to 0.25% each. So I'm still risking more than 1% in total, but to my mind, it's diversified enough across the probabilities that they're all going to go in the same direction. All right, that I'm willing to risk 1 or 1.5% on that trade. Okay, so now that we've done that, and we've sort of looked at a few, the yen pairs seem to be the best. We've had a look at some of the pound pairs, pound CAD. Pound CAD, they're all sort of not really offering a lot of clarity. Let's look at pound Sing. Pound Sing is also drifting to the upside as well. So that's not so bad. You can also do things, before I go, we're sort of halfway through where I want to go this morning before we do our proper market scan and then nail down which charts are offering the setups. We can also include, for example, a moving average. So the moving average here, now, all I want you to do in this particular case is ask yourself, is price above the moving average, on top of the moving average, or below the moving average? So if it's on top of the moving average, it's generally flowing up. If it's on top of the moving average, it's probably going sideways. And if it's below the moving average, it's probably trending lower. So if we put this on, you can see that it's generally above the 20-period moving average. And the angle of the 20-period moving average is angling up. We don't even have to use the 20. We could do something different. We could use a 50, for example. So there we go. So we're generally above that. Here we're below it, and now we're above it. So we're generally bullish. Okay, so if we go look at euro dollar, what does it look like? Right now, it's above and below, and you can see it's kind of bobbing above, goes below, goes above, goes below. So actually, on a slightly bigger picture, you can see that the euro dollar is swinging pretty wildly and doesn't really know what it wants to do. It's below the 50 period now, so it's more bearish than bullish, but it's still, you can see it's just swinging above and below. Then when we look at something such as Swissie yen, you can see that it's generally above that 50 period moving average for the most part. So occasionally it has a weekly retracement, so it's had a bigger correction below that. But it's generally bullish, excuse me, and the angle is trending up. So it's nice, and it's like a nice healthy uptrend. And that's a good example. So let's look at the indices. So let's look, for example, at the indices here. Look at that. Very nice, beautiful, smooth price action trend flowing above the moving average. That is a really nice, solid trend. Nice and healthy. So we go to the S&P 500. Same thing. Just trending beautifully above that 50-period moving average. We look at the weekly, it's still trending above that 50-period moving average. So I just want you to kind of take away it's not necessarily specifically what that number of moving average is. Is it 20, 25, 12, 13, 21, whatever it is. It's generally how are we using it in relation to price action. And so we're using it here as a compass guide. It's sort of giving us an organic trend line. we're above that trend line, therefore we're bullish. Here we went below that trend line, so we were bearish for that period over there. And so we just want to make sure that we are cognizant and aware of that. So let's look at gold, because gold is a good example. So if we did that, what do we kind of notice about gold? Well, gold was below this trend line. Now it's kind of broken up above it. Now it's bobbing below it. So we don't, again, I would say that it is swinging either side of this line. And we don't really have a clear trend just yet. Okay, arguably, we have higher lows right now, higher lows, and what could be a higher low from higher lows and higher highs. We've got higher highs here. We could potentially have that turnaround here. But it's not a great trend. Give me a second here. I'm getting a bit blocked up. Give me a second here. So it's not a great trend. And I really do want, if there's one thing that you take away from today, I want you to understand that the market conditions are like weather conditions. We want to be aware of what those market conditions are. Because when we have nice, smooth flowing trends, we have much safer, higher probability money-making conditions. And I use the words money-making intentionally because we don't need to be, we definitely should not be shy. We need to be comfortable talking about money. We're here to make money. It's a business of making money. We're not trying to be greedy. We're trying to increase our personal wealth and our personal earnings by earning either a secondary source of income from the markets or a primary source of income, whatever your personal choice is, or wherever your situation is right now. Maybe down the line you want to do your dream job of hosting a doggy daycare at home, but you don't want to have to worry about money, so you're going to trade in the background. That's kind of that, that's a very realistic, normal type of goal. People want to make sure that money isn't a concern for them, so that at least they're making enough money per month off their trading. And actually, that's not necessarily a bad approach. And some people love trading. It's not just a hobby. It's not just a job. It's a hobby for the meaning that they love all the things they learn about it. They love talking about it. They love talking about economic policies and all kinds of stuff like that. So then for them, it's going to be a job and and a hobby and a money-making thing. It's a full-time thing. So it depends. It really does vary. And sometimes you're not who you are in your 20s. You're not who you are in your 30s and 40s. It changes. You think when you start this journey that you just want to be trading all the time. And then you realize that down the line, you want to start enjoying life and not trading all the time. So we want to do that. Oh, okay. So then the question has come through now, which is a great question, is to do with the specific options here of, whether we go with simple, exponential, smooth, or linear weighted. It does actually depend on your strategy, but the difference between them visually, when we look at them, is not always a huge amount. It's not necessarily make or break. And the way that I'm using them here is just as an organic trend line. If I change between them, it's probably not going to change every picture on every single setup. It might look slightly different. So we'll try exponential here and see how that does it. So in this case, it looks a little bit more bearish, and the price action is still in an uptrend. Okay, so the indicators actually, so now what I'm going to do is now I'm going to go to the wave rider indicators, because now they become, because that's where it's actually quite good. In a situation like this, where you're not sure which it should be, the indicator can actually work out with the pivots which way you should probably be going. So the one thing I wanted to show you here, so there's a couple of things I wanted to highlight here. So a couple of things I wanted to highlight here. We have got a little bit, this is just the Hong Kong Hang Seng Index. We've had price test a historic level of lows. It's produced a bullish candle here. It's in a strong downtrend, and overall it's very bearish, but it's got a little bit of bullish divergence. So I am interested to see if over the coming year, if we see this starting to turn around. So one of the ways in which we would see that is if this downtrend if we break up above that level, because that would be the downward bearish momentum. We would break up above it, and we would potentially start, but it's a weekly chart. So, I mean, we've only got 50 candles away at the end of the year. In fact, obviously less now. We've got like 47 candles left, and then we're done. I wanted to show you that quickly. I also wanted to show you crude oil. So crude oil had been moving down. It worked its way into an ascending triangle. So forget about, kind of what you see prior to this. So ignore everything that you would see. Everything that you would see there. Like, forget about all that. If you just focus on this, it was an ascending triangle. We broke out. We hit a strong level of resistance, and we've come back down. So part of the reason head and shoulders, double bottoms, double tops, ascending triangles, descending triangles usually target 1-to-1 is because of this type of behavior. In this particular case, if we targeted this as a breakout, we would have hit just over 1-to-1. If we put our stop loss inside here or below here, we would have just hit 1-to-1 before it reversed. Doesn't mean that in the future it's not going to come back up above this line, but this is a really important thing. So please listen to me here. And actually, I don't think this is a problem with Actions to Wealth students and and obviously with the users here. But elsewhere it is. Here we're learning to trade. We're taking very short moves on the market. And that is the religion or the central functioning or purpose. No, purpose isn't the right word, but that is our, I guess you could say that is our central task here, is to only look for short-term moves. When you're an investor, it's a very different thing. When you're an investor, you're putting money in once and you want to kind of leave it there for weeks or months or maybe years. And you don't want to have to, and it has to go up. Like there's only one direction it can go in. So when you're an investor, you are not actively getting in and out of the markets. Your goal really is just that a market should go in a direction, very high probability for a very long period of time. So it's a much slower, almost passive once-off activity. But trading is a daily activity. It's like you want to make money every month. So to do that, you need to be closing trades. You've got to, and it's like, there's that expression ABC, always be closing. So you've always got to be closing trades. Not necessarily premature, but within what your strategy tells you to do. But you must be doing that, because if you're not closing trades, you're not banking profits, or you're staying in trades that are maybe going against you. And so your goal is to close it as a loss or close it as a winner based on your strategy. And the goal is that you either make big wins or lots of wins so that the losses don't matter. But that's a really important sort of psychological mindset. And I have a lot of people where they're taking a trade, but they've got this idea in their head, like they're getting into gold, and then they think, well, gold a hedge against inflation, which it is not. That's an urban myth. And then they stay in it. So then they move their stop loss. So they risked 1% and now they've got 15% drawdown because gold's been going down for 3 months and they can't understand it because somebody told them gold is a hedge against inflation. So that kind of stuff you don't do as a trader. As a trader, you go, I see a bullish setup on gold. Okay, I hit my target, or I didn't hit my target. Now it's gone bearish. Okay, there's a bearish setup on gold. I'm going gold. So we're not concerned about where a market is going to be a year from now or 2 years from now or 6 months from now. We don't care, because wherever it is, if it's trending up, we'll be buying. If it's trending down in the future, we'll be selling. And that is such a crucial, important philosophy of trading. There we go. That's what I meant to say. And that's why we take profits. If our strategy says take profit at 1-to-1 or take profit ahead of the next support resistance level, that's why you do it. Because we don't presume to think that the market is going to be kind to us. It's like a circus lion or a circus tiger. If we're not paying attention, it will bite us. So we know that. So we have to do our stuff. Okay, so very quickly, we're going to use the wave rider. We're going to run through the charts and we're going to see what the setups are. We're going to run through. We'll do the non-currency pairs first, just as a matter of interest. I normally only trade currencies with the wave rider, but I want to have a look and see how they show up. So let's look at gold. So when we look at gold here, you can see, and remember that the goal here is that we want to make sure that the color of the channel and the pivots. Is everyone there? Has Zoom frozen, or is it my MT4 that's frozen? Just give me, you guys can still hear and see me. Okay, so it appears, there we go, we're fine. There we go. Okay, we're good. So we have a bit of a dislocator, which makes sense. We've got a green weekly pivot and we've got a red channel, and it makes sense. Why does it make sense? Because we saw that gold was giving mixed signals. We saw that on the price. It's giving mixed signals. Okay, so let's look at crude oil. Let's go look at, we're looking at crude oil now, not gold. That's me. There we go. Let's look at gold. Here we go. I wasn't even on gold. Sorry, I kept confusing the XTI. I don't even know why that was. All right, so here we go. Wait for it. Okay, so it's not setting up properly this way. But generally, we could argue in this particular case that gold is drifting higher, but we've got sort of a green channel to the upside, red channel going down, sort of giving mixed signals. I would say overall it's more bullish than bearish. So I'll wait until I see a green line here. Again, what I'm trying to do in today's session, guys, is give you background skills. So a little bit of wax on, wax off, where I'm improving your price action reading skills as well. So so that you'll know why the indicator is giving you a signal, and you'll go, yes, that makes sense because the price action is bullish, and so it improves your confidence and your results. So anyway, so gold also giving us some mixed signals there. We got red here and we've got green there, so some mixed signals. Let's have a quick look, for example, at the Dow. And here, of course, we've got green and green and green. So that makes sense. It's a beautiful uptrend. The way that I approach this is, as soon as I find a really good trend, I know which way I'm going. I know it's a buy. And because I take so many trades, if I do take a buy here and everything looks good, and then the market changes trend, I'm actually okay with that, because 100 times out of 100, whenever I see that, more of the time it doesn't change trend, it keeps going. So there's no regret. I'd rather just do that all the time, just focus on strong trends or where the direction is clear and just take that. And then the losses are just statistical losses, and unless there's clues that it's going to run out. Anyway, so that looks good. We've got the S&P also look good. These all look really, really good. So for me, any kind of a setup, anytime there's a red thing and it goes green, I'll be watching that like a hawk. Like, this will be on my watch list, and I'm like, the second I see green here, I'm gonna look for that very, very first setup, and I'm gonna take it, because they like, those are the best ones. So again, we've got some setups here. Let's refresh this. These are all just good, strong trends. Now, interesting, I live in the UK, but the FTSE, the UK 100, is one of the worst indices. It's one of the absolute worst indices, and it always has been. When I first met Paul, he was in London, and Paul was senior to me. So Paul was my trading coach and instructor, almost 15 years ago. And he was just so strict. He had no tolerance. This is a funny thing. I don't think it's a bad thing, but he had, like, of all the coaches, Paul was the least tolerant of me doing stupid stuff. Just doesn't tolerate it, but it's because he's aggressive about looking out for people. He's very protective. I've just remembered that now. I've never said it before. I've just remembered it now. Then this is Paul, the founder of Actions to Wealth, in case you don't know who that is. Okay, so the FTSE is terrible. It's just so choppy and sideways. You could probably trade it, but if somebody said to you, well, your budget only allows for you to trade 3 or 4 things, then you won't trade the choppiest things. You would want to trade the strongest things. So I just want to show you that the DAX is the next one. So once you leave the US indices, you go with the DAX as the next best one, which is trending very well in comparison. And then you can look at things like the Nikkei is also going really well. There's some really, really good stuff here. Look at this, right there. Very nice little consolidation, and it's breaking out of the consolidation now. So for my Spartan mentees, this is a, excuse me, that's a setup. If any of you are in today and you're listening, that is a setup there going. Stop loss below the low here, targeting. You could target probably to the upside here, if not higher, or trailing stop. That's your thing. Then let's run through the currency pairs. Guys, are you enjoying this? Are you finding this instructive and useful? I hope so. I hope so. All right. So euro dollar is looking bearish, but there's a conflict here, so that's not going to work for me. Sterling, nothing. But when this moves, it will obviously trigger. We'll get a sense of that. Okay, got that. Thanks. Aussie dollar. Again, we've got this. I want to make sure, just make sure that it is refreshed and it is everything is correct, because sometimes it hasn't updated yet. Okay, so yes, you can, you always hear them talk about, oh, Catherine. Okay, I used to live in Wimbledon, so I was in central London, for those of you who don't know London very well. And then I moved to a place called Bromley, which is just sort of south of the city, but it's still in London. It's still in London, but it's a suburb down south. And now we've moved in January to Herne Bay. So we've moved to the edge of the UK, which is just across the channel from France. So we're almost on the tip, that is the closest tip to France. I'm 10 minutes from the beach. I mean, it's not like a beach like you would have in other countries, but it's still, I live on the coast. It's very nice. So yes, it is. And I have to say, it's a lifestyle upgrade. So for those of you who, the journey as a trader takes time, like to build up money and then do this, because you want to grow your account, then you want to don't want to take the money out, but sometimes you have to buy a house, so you got to take a large chunk out. And so there's always that, excuse me, always that battle. I'm going to keep you for about 5-10 minutes more, and then we'll wrap up. Okay. So I just want to highlight here that when you hear traders talk about risk, on any given trade, there is a certain amount of risk. So, but I want to, that's obvious, you know that. But what I want to clarify that, what I mean is that some trades come with a higher probability of success and lower risk. And sometimes there's a trade setup that has, you can see where the risks are. So for example, let's say you want to sell in, you want to short this particular, I'll just make it black for the purpose of this. You want to sell, maybe you're getting a sell signal here, but there's a massive support resistance level here, historic, monthly, whatever support resistance level here. So that's your risk, because you're so close to that major level that if you get it now, the potential profit on that. And that's like an obvious, like that's a normal one that every trader is like, how much potential profit do I have on this trade? So that's a type of risk. How much potential profit is there before I hit the next level? Then maybe you're getting the trade set up on Thursday, and maybe there's an ECB, it's a euro trade, or there's a central bank interest rate announcement, and so you're not sure what's going to happen. So that's another type of risk. So as you gain more experience, you learn to be able to identify all the risks. Like you've pretty much determined, you've learned from experience all the different things that could possibly interfere with your trade. So I just want to talk to you about that. So another example that would be, I could ignore the channel. That's a risk. I could ignore the channel and sell because I've got this trend, the pivot has gone red, and therefore I could sell. And I might actually make money on it. But you need to know the stats then. Out of 100 trades where you ignored the channel and just took trades off the pivots, how many of those made money, and how much did you make compared to the ones where you took with the channel and the pivots? And that's a numbers game. So it's a type of risk. It's not that it's necessarily a bad idea. I want you guys to understand that not every trade idea is a bad idea, but some, especially when you're training new traders, you want them to have the right amount of winners and losses. If too many winners and you think it's easy, and it isn't, and you get set up for a crash, and your head will break because you thought you had it all figured out. And too many losses, and you won't think you could do this, which you can. So you need an equal balance of winners and losses. I've had people so very quick story because I think it's worthwhile. So when I was learning how to trade, there was a strategy. It was a 5-minute strategy. And there was a girl in the class who was disciplined enough that she understood the rules, and she didn't mess around at all. And every day she would take like one trade of the strategy that's set up. And if she hit a target, she would stop. And she was so disciplined. It was absolutely incredible. But here's the story. This is the point of the story. She had, I don't know how this was possible, but she had something like 35 or 45 straight winning trades. So what happened was that she convinced herself that as disciplined as she was, if she stuck to the rules, the profits were guaranteed. And by pure fluke, I was there the one day. So there was like a training room that you could go study in London. And some days I was there, some days I wasn't there, but the one day I was there, and she had got into a trade, her first losing trade after a winning streak of it was something ridiculous. It was like 50 trades or something. And she was losing her mind. And I mean that in a like, there's a lesson here. She couldn't understand because she thought she hadn't done anything wrong, and she hadn't done anything wrong. She hadn't. She'd done everything right. She was just encountering a losing trade. But because she hadn't encountered one, she just didn't know how to handle it. So every now and again you need to have a loss to remind you that you can never avoid them. That's the only important thing. Okay, so let's run through these. So Aussie dollar looking bearish, channel's not in the right place, dollar Swissy, let's get that, come on. So obviously MT4 has decided to take a break again. All right, come on. It should be fine. I probably just threw too many things on the chart at the same time. There we go. Okay, here, for example, you can see it's potentially starting to, so possibly what's going to happen here is we're seeing a possible shift in the direction of these charts, because when you look at all the majors so far, The pivots have changed color, but the channels haven't. So we'll see if that's going to happen. But I would watch this area to see if there's a bearish setup in the coming week. Basically, I'd look over the coming week. Do we break outside of those channels? Are the channels going to start turning around and flipping, going the other way? Or are we going to get a reversal and then we're going to get some setups? So the majors could provide some good setups there. We saw Kiwi dollar. It's very slow. This isn't going to help me very much if we do it this way. It's really weird. Okay, this is not going to help me if it's going to go this slowly. Okay, so what I'm going to do as well, I'm just going to hide or delete it for now, just to remove that. And if I get that weekly one, I'm just going to take that off as well. All I really am concerned with right now is those pivots. So what happens if I do that? No. Okay, so let's just go to the layout with the channel. Sorry guys, it's not supposed to be this slow. Okay, but I do want to get rid of this stuff here. Can I? Will that work? Do that and get rid of that. Just to speed it up a little bit. Okay, so again, no real sync up there. Let's have a look at, again, I want to have a look at the yen pairs as well. So let's look at Aussie yen. It's not normally this slow. I might restart it. It's not normally this slow. Okay, all right. All right, so again, no clear signal. So I think I really want to prefer to go with ones that are offering those. We've seen the indices are doing that. I wanted to see, for example, if Swiss yen would do that. So this is good. So again, the yen pairs will sit on our watch list. Look at this little consolidation here. So I would keep an eye on this because when we break out, if we break out to the upside, that's going to be a very nice setup. All right. CAD yen. Again, the only thing I want you to be cognizant of here, please, ladies and gents, is that we're sitting kind of near a very significant level. So one of the things that you may or may not be aware of is, you know, Japan is very much an export economy. And so they are very sensitive as to what their exchange rate is with, mainly with the US dollar. They're really only concerned, that's their biggest, again, that's how their policies work. First of all, let's make sure we're cool with the US dollar, and then everyone else will kind of see how that goes. And so for them with dollar yen, they've had a weakening currency for a while, and this kind of 150 level, that 150 area, is a little bit of a problem for them. So when you hear them talking about intervention or changing policies, that's usually because they're finding that their currency is starting to impact their economy if their currency gets a little bit too weak. So then they want to change that kind of thing and turn it around. But for now, it appears as though it keeps wanting to go that way. So just be aware of that. Euro yen as well, we've got some mix here. Let's refresh these. So again, I still like these pairs, and I still think they're going to continue to push higher. All I would ask you to do is to just listen out for any talk of intervention. It might not happen for 6 months, but if you hear them talking about it, become a little bit more cautious, especially if they're, you know, we'll be covering it in these sessions anyway. So maybe don't worry about it. Maybe don't worry about it. Okay. So again, here's a setup where I would be looking to see if price then reverses within the channel or breaks out of the channel. So in a situation like this, which we've seen quite a few of the majors are doing that at the moment, they are, they within a channel, they could find resistance at the top of the channel and turn around, or they've actually started to trend up and they're going to break out of the channel. So it is a fork in the road. You have to wait until you get, this is really where you want to wait and get that confirmation. We're going to be looking to see if we get a setup similar to this, and nice bearish candles will support that. So for example, here you can see that where those big support resistance levels are, there's a big one there, and it'll potentially impact that channel as well. So that's what I would really be keeping an eye out. Let's just have a look here. Nothing else that's really What about Euro Sing, for example? Largely sideways. Look at the, and also please look at the angle of the channel as it goes to sideways, as it starts to go more equal, parallel to the side or sideways. That's an indication the market doesn't have a lot of momentum. When it starts to angle up, so what kind of angle are we talking here? We're saying that if it's going this way, it's kind of flat. That's a sideways market. As it starts to gain that angle of momentum, it becomes more and more bullish. When it's going up like this, it's incredibly bullish. So the sweet spot is somewhere in kind of this sort of area, somewhere between those two angles. When a market is going up, that is a very nice, healthy, sustainable trend, and vice versa. When you go down, for example, you're looking somewhere in that angle is a very nice, sustainable downtrend. So the angle of the channel also will give you an indication of the momentum of that. Okay. Euro Swissy short, let's have a look. Thank you, because I want to wrap up, but it's taking so long, I'm not going to be able to go through all the pairs today. But what I did want to talk about was gold, oil, the indices, and the majors as well. I wanted to cover those. I need a refresh button up here or something. Yeah, there we go. So this looks potentially good. One way to do that is just an entry below the low, because you can see it's a little bit of a consolidation at the moment, 3 or 4 candles sideways going that way. It's very simple, guys. The market is either moving or not moving. So right now you can see it's sideways within these things. Overall, yes, it's kind of moving. Just the last few days not going anywhere. And we're looking to see if it's going to head down. In this particular case, what we're looking for, guys, is one of two things. We're looking for a very nice bearish candle, a nice red body candle, and this is what's called a momentum candle. So the momentum candle means that you would get a red momentum candle that would break just outside of that consolidation. So this is what my mentees are taught. You guys have got plenty going on here, but this is what I cover: is these momentum candles break away, and if it breaks to the downside, that's your go ahead signal. Like that's what you're looking for. Stop loss above the high, or wherever you want to put your stop loss, and then you target as you go. On the other hand, should we get a green breakout candle to the upside here, we could be seeing a possible shift in that direction, but I don't think so, not yet. So with these kinds of conditions, thank you very much for pointing this out, by the way, you're a star. I'm looking for a nice red bearish, very nice bearish candle would be the one that for me is going to be like either going to be the actual setup or going to be clues that the market is going to start moving very soon. Okay, so nice red-bodied candles, so nice weak rejection candle, those wicks, any of these. Also, you get this type of thing here, which is exhaustion, is pretty cool. So if you get a little bit of exhaustion there, you can see it just can't get there, and then you get then the market moves away from that. Right now, we're just stuck within this range, but what could actually happen, excuse me, is we get that exhaustion kind of in this area. So we get exhaustion here, and then we get a nice little rejection candle. Beautiful, forget that. Okay. Cool. I think I'm going to leave you with that for today. Just wanted to see if there was anything else. There's a lot of these that look as though they're kind of possibly in I'm about to shift kind of mode like this, where we're coming up, meeting the top of the channel. So that's a bit of a wait and see. But in a way, that's a good thing, because it means that once they all break through, we're gonna have a run, like we're gonna have a new trend opportunity there. If you'll be home, reply yes. Okay. All right, cool. Ladies and gents, I think I'm going to leave you with that. That was it, really. I wanted to have a look at these. We've looked at dollar Sing as well. Yeah, they're all coming to the top of a channel, the bottom of a channel. A lot actually are coming to the top of a channel. Here you can see there's a strong level of resistance. Resistance there, resistance there, resistance there, and it's trying to decide what it's going to do. So that's happening in a lot of the different charts, and we're right near the top of the channel. So we're either going to break out of those channels, maybe across the board, or potentially we're going to have a rejection on Monday or Tuesday, and then we're going to see where it goes. So just this is one of those things where you do want to wait a couple of days and make sure you get those confirmations. There we go, ladies and gents. I'm going to leave you with that, and I am going to say adios. But I want to say thank you very much. I absolutely enjoyed it. Thank you very, very much. And yeah, I wish I could say to you, oh, there's lots of setups everywhere, but there aren't. There's really not a lot that are setting up now, but potentially by the end of the week or Wednesday or Thursday, they will show up. Okay, so thank you very much, Sam. Yeah, great. Thank you very much. And yeah, absolutely. Always a pleasure, guys. Nice to see you again. So I'm going to stop sharing and hand back over to Sam. and then I am going to head off. But thank you guys. Thank you very much.